What is up, ladies and gentlemen? Today is Monday, March 20th, 2023. And today we're going to be covering a lot of different stuff during this live stream. We're going to start up in a few moments here. I am tweeting out everything. Make sure to get everybody in here. Let me know how it sounds, the mic level, and all that. And we'll start here in the next 2 minutes. All right, guys, let's go ahead and get started here. Let me turn down the volume on this. All right, so today we're going to be covering a few different things. First of all, I want to welcome everybody to the live stream. Thank you guys truly for being here. Appreciate every single one of you. It has been a crazy couple weeks, really. I know I haven't gone live in a few weeks. I've been doing some traveling, so I was kind of out of town. And a bunch of other stuff. Actually, let me put my face cam on. Forgot, my bad. Here we go. So I was traveling and I was doing a bunch of other stuff. Been kind of, getting things together, but still been, trying to create shorts and small content here and there as well. Trying to stay consistent with that. So today we're going to be talking about just kind of an overview of what we're going to be covering. We're going to be talking a little bit about Bitcoin's price. As you guys know, last week, if you don't know, last week we had a 26.5% move up in Bitcoin's price here. The biggest move in 4 years, guys, since 2019. This is the biggest weekly candle that we've had here. Also, we're going to be going over the economic calendar for the week. As you guys know, last week we had the CPI data, which played a part in why we got the volatility last week and we got a big move up. We're going to talk about that. We're going to talk about what we have this week. This week on Wednesday, we have another big event. We're going to be having the interest rate decisions this week. So we're going to go more into details on that today. We're going to go over some news stories that we're keeping up with that could have some impacts on the market. Then we'll do a market analysis and then end it with a live Q&A. So if you guys have any questions about anything that I'm covering throughout this live stream, just drop it in the comments. And then when we get to the Q&A section, I'll go back and look for those questions so that I can answer those questions for you guys. If, of course, I have the answers for you. So now that we've covered all that, let's go ahead and talk about the price, right? Let's look at the price. As you guys already know, 26.5%. That's pretty insane. Let me switch over. 26.5% here in the last week. If we look at the daily here, the daily looks pretty crazy over the last, starting the 11th of March. So the last 9 days, basically, has been pretty wild. If we kind of look at how far we've gone to where we are now, that's a 37% move in 9 days, guys. So that's a pretty big deal. If we go and look at, let's refresh this here. If we look at the rest of the market right now, we can see over the last 7 days, Bitcoin's up over 15%. Ethereum is lagging a bit, and that's a theme that you're going to see. Remember, Bitcoin is the king of cryptocurrency. Ethereum is the king of the altcoins. So when you see Ethereum lagging behind Bitcoin like this, then you will likely also see the other altcoins probably also kind of lagging a bit behind. So if we look over the last 7 days, you'll see BNB is up 9%. XRP is only up 1.5%. You're going to see Cardano and Polygon, they're actually down over the last 7 days. Doge is pretty much flat. Solana had a nice run up, I think, in the last like 24 hours or so, up 13%. So it's a little bit mixed, right? And the reason why, if we look back at the Bitcoin cycle, and the Bitcoin dominance cycle, let me see if I have a graphic. I know I've showed this graphic before. Let me see if I can find it real quick. Bitcoin dominance chart, I think, or cycle. Let me see. Let's see. Maybe this one here I can show you guys. Let me see what this one looks like. Because there's a method to the madness, right? All right, let's use this one. Whoops, let's use this one here. Save. Let's go ahead and pop this open. Here we go. All right, let me put this here so you guys can see it. So this is the Bitcoin cycle, right? And the way that it usually goes, it starts with Bitcoin's dominance going up, which means that Bitcoin's price goes up, and then the altcoins usually go down, right? Now, if Bitcoin's dominance goes up, Bitcoin's price goes down, then altcoins dump, basically. If Bitcoin's dominance goes up, Bitcoin just kind of consolidate. Altcoins also accumulate and they consolidate as well. Now, if Bitcoin's dominance goes down and Bitcoins go up and Bitcoin's price goes up, altcoins go up a lot more. If dominance goes down, price goes down for Bitcoin, altcoins usually consolidate. And if Bitcoin dominance goes down, Bitcoin's price accumulates and altcoins go up. So a lot of it has to do with the Bitcoin dominance, right? If Bitcoin dominance is going up, that means money from altcoins are going into Bitcoin, right? So since Bitcoin is the one going up, Bitcoin dominance is going up, then altcoin prices are probably either going to be down, or they're just kind of gonna, consolidate a bit, right? And when we'll see out season is later on in the bull market when Bitcoin dominance starts to go down. That's when we'll see, that means that money is flowing out of Bitcoin into the rest of the cryptocurrency market. So if the dominance is going down, but the rest of the market, including Bitcoin, is going up, then, that's called out season, right? So that means a lot of money is still coming into the market, but it's flowing into other coins other than just Bitcoin. So those are some things that, and I have a video on this on YouTube as well. You guys can look it up. I think it's called the Bitcoin dominance or something like that. If we pull it up here, go to YouTube real quick. Bitcoin.daily. Nope, I don't even know my own channel, right? Bitcoin Daily TV. All right, so if we go to video here, and you go to the search, Bitcoin dominance. So I have this video right here that I did a year ago, Bitcoin dominance explained, and I go a lot more into detail on this. I'll probably do maybe another overview on this video, on this type of video, but definitely check that out. So back to where we were. I might have got a little off topic there. But yeah, so I just wanted to give you guys an idea on why Bitcoin's price was going up, why it's been up so much in the last 7 days, and altcoins have been kind of sluggish, right? They haven't really been moving much, and that's it. It all has to do with the cycle of Bitcoin's dominance. And if you can actually pull up a chart on Bitcoin's dominance. Let me see where did my things go? Here we go. So if we look at Bitcoin dominance, look at this. Since the 11th of March, which if you look at Bitcoin's price, that's exactly when the price started moving up. And this is a dominance graph. It's been going up every single day. So that means that the majority of the money flowing into crypto right now is flowing into Bitcoin. So that's why Bitcoin's going up while other things are pretty much kind of flat or going down, or whatever the case may be. All right, so now that we covered that, let's take a look at well, real quick, let me run through the rest of the altcoins, see if there's anything that really stood out here. So Stacks is up 42% over the last week. I'm not exactly sure why. I'm not invested in this project, but I did read some stuff on it. Immutable X, IMX, up 55% on the week. So that's definitely interesting as well. EOS, this is a OG in crypto, up 10% over the last week. Conflux up 68% over the last week. So you'll still see some. Look at Neo, another OG, up 14%. GMX up 17%. Singularity Net, this is an AI project here that I actually covered in one of my videos, up 24% over the last week. So I've spoken about this. I spoke about GRT, the graph, and a few other coins recently over the last few weeks. Look at Mask Network, 77%. So you'll see some of these ridiculous pumps on some of these projects depending on what events might be going on for them, during that week or whatever. So let's go ahead and take a look here next at the economic calendar for the week. We already know on Wednesday is the next major thing that we're looking for, is the Fed interest rate decision. It's expected to be a 25 BPS basis points hike on Wednesday. So, which is actually better than what was expected probably a week before that. So probably before last week, it was expected the Fed, and if you listen to anybody of the Fed, including Jerome Powell and some of the other people, when they were speaking, they were very, very hawkish. And they were basically talking about increasing interest rate hikes at a stronger, faster pace and for a longer duration. So they were saying that there's going to be interest rate hikes, basically talking about going up to 50 BPS hikes per session, per decision, and extending it for basically the rest of 2023, the rest of this year. Because before that, they were saying that by the end of the year, they should at least pause or maybe even start cutting. After what's happened in the last 2 weeks with the banks failing, the buyouts, all that stuff going out, the bailouts, right? Now there's whispers of, well, first of all, now they're saying the consensus is at 25%, at 25 BPS, not 25%. Also, there's whispers of a possible pause on these interest rate hikes. A lot of people kind of talking about it, a lot of news outlets, and even major people in politics and just major people in the banking and financial system that are billionaires talking about that. In order for banks to succeed and to get through this phase right now that, there might have to be some sort of pause. So that's kind of what we're looking at right now. What people are kind of have their eyes on, what everybody's, waiting for basically on Wednesday when we have that press conference at 2:30 p.m. So it's expected on Wednesday to get that 25 BPS, and then everybody's going to be waiting Jerome Powell, who's going to be speaking on where they're at, because a couple things happened last week. So I want to bring this chart up as well. But the Fed last week added over $300 billion in basically to their balance, right? So if you didn't know, while a quantitative tightening is basically when they're taking funds out, taking assets out of their balance, and basically in a week they added back half of everything that they've done in the past year that they've taken out. So I'm trying to find, as I'm speaking, I'm trying to find at the same time the chart here. I'm not sure what I did with the chart. Where I put it? Is it in my downloads? Yeah, I think it's in my downloads. Okay, here it is. So here's a chart. And basically this shows that since last year, April, this is the total assets held by Federal Reserve banks, right? And you can see that it was going down, 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 down. And then basically in 1 week, which was last week, you guys can't even see that, can you? There we go. Sorry about that. So you can see since April here, it was going down. And then last week, in 1 week, they added basically half of what they've taken off as far as total assets held. They added back on last week, basically $300 billion, right? Now, the last time that we saw anything of this magnitude being added like that was, let me pull this up, was basically back in 2020. So in 2020 was the last time that we saw anything like this where that much was added. And before that, it was back in 2008 during during the crisis, right? The financial crisis and all that. So basically, we're talking about potentially getting back into quantitative easing, right? Now, what was added was not what's usually added, but it's a form of quantitative easing, right? Because they're still introducing money into the market. And if we look here, this is actually Arthur Hayes. So Arthur Hayes, if you don't know who he is, he was the founder, CEO of BitMEX, which was basically the most popular derivatives trading platform for a few years. And he actually had to basically leave as CEO so he wouldn't go to jail. So it's a step down, right? So he wrote an article basically saying that bank bailouts is very, very bullish for Bitcoin. And that he believes that the Fed's plan to save the banking system is just repackaged quantitative easing, which will trigger another bull market for financial assets. So you guys can see here, it's a BitMEX co-founder and et cetera, et cetera. So although quantitative easing, the definition for it is different than what we're currently seeing right now, basically he's saying that this is a repackaged form of quantitative easing that the Fed is pretty much taking right now because they can't let the banking system fail, right? And this has a lot to do with why Bitcoin has been going up. So Bitcoin is not just a hedge against inflation. Remember, Bitcoin was created because of the failure of financial systems and the banking systems. So Bitcoin is really a hedge against banks more than a hedge against inflation. So that's one of the big things that's been apparent in the last 9 days, when we've had this run up of over 30% for Bitcoin, while banks have been struggling, failing, needing to be bailed out, closing, being bought out, etc., filing for bankruptcy. Bitcoin has been completely fine. There's been no issues with Bitcoin, and Bitcoin's value has actually been going up. So a lot of things going on right now. Obviously, the CPI inflation data had to do with it as well. If we look over here, we can see that it fell to 6%. So I wonder if I can go back on dates here. Let me see. Can I go previous week? So we go to previous week here and go to inflation. We can see that over the last 1, 2, 3. Well, let's start here. 1, 2, 3, 4, 5, 6, 7, 8. 8 months in a row with inflation dropping. And we just went down from 6.4% to 6% last month. So that was bullish overall news for the markets, and bullish for the interest rate decision that we have coming up. And then we got all the things going on with the banks, which is also bullish overall for Bitcoin. So those two things, those two events there, played a big part in all of this, as far as why Bitcoin's been going up over the last 9 days, over 30%. So that's basically what we're looking at right now as far as the economic calendar. The next big thing, of course, is let me see, go back here to this week. So the next big thing that we're looking at here is, of course, on Wednesday. So all eyes are on that. This is going to basically decide how the rest of this week is going to go. Once we run into that, I think leading up to it, we might see possibly a continued run up, or maybe some sideways action. I don't know, unless there's any whispers of, or anything happens that we're not prepared for, or that the market's not expecting. I don't see why, as far as that, the Bitcoin's price would drop down. But we are at a resistance, and we'll talk about this in a few moments here once we do a market analysis. But before we jump into the market analysis, I want to go over some of the news, some of the other news going on right now in the crypto market. So as you guys already know, there's been multiple banks that have been failing here, and Silicon Valley officially filed for Chapter 11 bankruptcy over the last week. And then the thing with this is that there's also 186 banks that were found to have a similar risk as Silicon Valley Bank. So this is why we're talking about the quantitative easing, right? Because if there's 186 banks, including what is the bank called? Do I have it up here? Including Credit Suisse. I don't know if it's called Credit Suisse, but I'm calling it Credit Suisse. They just had to sell for they just sold the bank for $2 billion. And we're talking about one of the biggest banks that, in the world probably. They've run into so many issues that they had to sell the bank. And there's 186 more banks that have similar issues. That's why we're talking about this quantitative easing being repackaged, like Arthur said here, because the Fed has to save the banking system. They have to. They can't let the bank fail. If the bank fails and the US dollar fails, then the economy fails, right? They have to save the banking system. So what are they going to do? They're going to print a bunch of money and put the money into the banks. So they have to stabilize the banks, right? It has to be stabilized. So that's why we're talking about this. And as long as the Fed has to do this, that is bullish for Bitcoin, because Bitcoin is a hedge on banks, and it's going to be bullish for any risk on assets. In other news, and as you can see, well, not in other news, but just kind of to continue this, last week, U.S. banks borrowed $165 billion from the Fed. $165 billion, guys. That's part of what increased the Fed balance by $300 billion last week. And we can see BlackRock CEO, BlackRock, basically the biggest investment fund in the world. The CEO saying that more bank seizures could occur going forward, and inflation is going to persist, because he knows that the banks are struggling because the interest rate hikes, right? And because of that, it's too aggressive. The Fed is going to have to slow down on it. If it slows down, that means inflation will probably persist. We can see here now that the U.S. Fed swaps now show 100 BPS rate cut by December. This was not seen in 2 weeks ago. This was definitely not the case. 2 weeks ago, it was the Fed swaps were showing that there's going to continue being interest rate hikes through December and into 2024. Now it's showing that there's 100 BPS rate cut by December. That means that there'll be a pause in interest rate hikes, and then that they're going to start cutting way before December. They're not going to cut 100 BPS rate in 1 month, right? So that means before that, they'll start cutting interest rates. Of course, that's bullish for any risk on assets, bullish for crypto, bullish for Bitcoin. So that's this all is all tied together, really, right? As you guys know, UBS acquired Credit Suisse Bank for $2 billion. Another thing here, Florida Governor Ron DeSantis calls for a ban on CBDCs. Now, he's known for saying some outlandish things, and I say outlandish because against the government, so when someone in the government is speaking against basically the government, I'm here for it. These are things that I'm already for, right? But yeah, he was saying that he wants to forbid it because, let me see where it is. Here it is. It will give officials a direct view of all consumer activities. So basically another way for Big Brother to track exactly what you're doing, when you're doing it, how you're doing it, right? That's basically what he was talking about there. We spoke about this already. Arthur Hayes on Buy the Effing Pivot. It's a good article. I recommend you guys to read that. And, just kind of tied in, Goldman Sachs today acknowledged that Bitcoin has been the best performer in 2023. Of course, right? Of course it is. Goldman, I think, let me see, year-to-date information technology. Look at Bitcoin. Bitcoin's up 51%. If I click it, here we go. Now we can actually see it. Bitcoin's up 51%. Information technology up 16%. Com services 15%. NASDAQ 100 15%. So everything else is way behind, right? 51%. That's insane compared to everything else. So and if we go over here, this was something dropped a couple days ago. Mazari is basically a on-chain data analytical company. And the founder of this company is saying that Bitcoin could reach $100,000 within the next 12 months. And basically he tweeted that his rough prediction for the next 12 months is that there's more bank failures in the next couple of weeks, which is going to cause Fed cuts eventually, and it's going to mean that quantitative easing is back. I didn't mean to click that. Let me just go right back to here. So that means that Bitcoin will begin to climb, and it's going to we're going to have sustained moderate inflation. Outside money and sound money is going to come into Bitcoin, because if inflation is going to be going up, people don't want to be in cash. So they'll go into something, probably risk on assets like Bitcoin, and that would take Bitcoin to $100,000. And then the last thing is institutions buy faster than feds can shut down. So as you guys know, basically the Fed has been after, and just the government has been after crypto, if it's felt like it, right, over the last couple weeks, trying to depeg coins or whatever it is, trying to ban and sue stable coins, trying to shut down staking, trying to shut down all sorts of things. But Bitcoin is, as you guys know, is resilient and has continued to go up. So let's jump into a market analysis here on what I'm thinking, what I'm looking at here over the next few days. As you guys know, once I do this, if you guys have any questions about anything that I've been going over, anything that I've been covering, drop it in the comments. I'm gonna do a Q&A after this. I'm gonna kind of do a little go over the prices right now on Bitcoin, all that. Then we'll jump into a Q&A. So if you have any questions, drop it in the comments right now, and I'll be looking over those. So let's jump into it. Let's start with the last week, right? So let's start the monthly. Let's look at the monthly real quick. And don't mind this thing here. This was for a video that I just shot. I'll be releasing it later today. It's a short video on how Bitcoin could potentially hit $100,000, and we'll talk about it here. So this is the monthly candles right now. As you know, January we had a big month of basically a 40% move up. Last month was pretty much flat. We literally ended at zero. And this month we've continued what we started back in January. So for the month right now, we're up 20% with a low of 19,500 and a high of 28,577, which we hit over the last week. So if we drop down into, before we drop down, let's look at some of these resistance zones here. So as you guys can see, we're currently at a big resistance area here. And this is a Fibonacci level, right? That if we look back in history, you can see that it played as a resistance for this candle right here and a support for this candle right here. You can also see it played as support for these three monthly candles here. Again, it played as a support right here for this candle before we broke down. And you can see that once we broke down, look how big this candle was when we broke below this level. So that was a massive candle, 37% candle in June of last year. And now we're back, right? We're back at the same level. So now you understand why it's such an important level, because it's played a role so many different times, right? 1, 2, 3, 4, 5, 6, 7, and then this is basically the 8th time that we're at this exact same point, whether it's been a resistance or support. So right now it's a resistance. Are we gonna break it on the first try? We don't know, right? But there is potential. So this is in line. It's basically around $29,000. Close enough to 30. So it's going to be in line with that $30,000 big whole number, right? So right here at this level, we're going to have that Fibonacci resistance. We're going to have $30,000, which is that big whole number. And we have that level that for the last, over the last few years, it's played a big role. So, so a lot of different levels there. If we open up, let's put on the volume shelves here, and we kind of take a look at those, we can see that this is at that same level is where volume activity picks up here, right? You can see that this level right here, look, there was nothing there. And we spoke about this, right? We've spoken about this before, where when we got here, I said, all right, once we break above this one, we're basically shooting up to this one because there's nothing here, right? And guess what? That's exactly what's happened here over the past month. Once we broke above this level right here, we have shot up. And what does this cover? This covers all this space right here, right? So this goes all the way up basically to $30,000. So that's all in line with the same. It's all telling the same story, that next big area of resistance is $30,000. So between 28 to 30, I think it's going to be that big level. And guess what? Right now, of course, we're at 28, right? We're just below it right now, but we're basically sitting at 28. So if we drop down to the weekly, let's take off those. On the weekly here, we can see a better breakdown of what's been going on. We can see that we had basically a push down here to 19,500. We closed that CME gap, and then we had the big move last week. And you can see that this is actually a hammer or a pin, which is a bullish candle in price action. And then that led right to this big green candle here. So as far as what I think we're going to see here, it is going to depend on it, and I think it's going to be dependent on the events and what happens on Wednesday, right? So that's going to play as a catalyst. It's going to play as either a catalyst. Hold on, my dog is too close to the power cables here, and I want to make sure he doesn't unplug anything. So there's going to be a catalyst on Wednesday, right? And that's going to decide what I believe what happens here. So we're either going to, depending what happens on Wednesday, we're either going to break above this resistance area, and it's gonna provide that catalyst, that risk on, that inflow, that bullish momentum to be able to break above all the levels that we just spoke about here, or it's gonna be the catalyst to potentially give us a retracement, probably back down. I would say to this range right here would be the first area of support. So that would be 25,000. And then the next areas of support would be, basically this whole range here, right? So that's between 25 to 22,000. With a possibility to wick back down to $20,000, right? That's always a possibility there, and that's basically what we're waiting on. We're on Wednesday, depending on what the rate decision is and what the outlook is going forward. It's probably how what's going to decide how this analysis works out. So if I was looking to play this here, and which I will be looking to play it leading up to Wednesday and the rest of the week, depending what happens, I'm trying to play it, depending on what that catalyst brings. So for sure, I'm going to have some breakout trades probably above $30,000, right? I think if we break above 30,000, we might see a continuation up to like 32, and there's an upside possibility of moving up to this next resistance area here. If we zoom out a bit, you can see that this is a big point of interest multiple times over here in its history. So you could play it with either as a scalp, with a quick scalp, grab some profits on the way up, and there could be a retracement back to 30, maybe back to 28. So I'll take profits on the way up, or you could take it as a swing, and then your targets being like 32,000 and potentially even $38,000. So it will be you'll be looking probably at 32, 34, and 36, and then 38 will be that last target there. So that's one way that you could possibly play that. The other way you could play it, at 28,000, you can start opening up some trades, potentially leading up to it, leading up to Wednesday. Now, at 28,000, the issue is that since we're consolidating there right now, there's going to be a lot of up and down activity there. So depending on your stop loss, you're probably going to get stopped out unless you have a very wide stop. If your stop is very wide though, and the catalyst ends up being down to the downside, then you're going to have a bigger loss than you probably want to. So that's why 28,000, initially I wanted to play it and I did. I've been stopped out twice from that trade. So now I'm probably going to sit out that 28,000 number. Look for maybe something at 27,000 if we get a move down, a retest there. But at 28,000 is probably a level that I don't really want to play right now. What else? That's pretty much it for long entries that I'm looking for. Now for short entries, probably I'd be looking for something below $27,000 or even at 28,000. So if you're not afraid of beginning to load up a little bit at 28, maybe a little bit more at 28,250, maybe a little bit more at 28,500, right? I would set it up with multiple short entries and then a stop loss probably like above like $29,000 or something like that. Or you can even make those entries a little bit wider. So maybe one at 28, maybe one at 28.5, maybe one at 29, maybe one close to 30. Because remember, 30 is a big resistance as well. And then at above 30, you would flip it into a long. So that's another thing you could do. So there's many different ways that you can play this as for the short. And you can also hedge against your long-term positions here. So again, thinking that, all right, we're at a big resistance here. Since majority of my portfolio is long Bitcoin, right? I'm going to hedge against those positions by opening up short positions at a resistance. And if we get above 30,000, I'm gonna just close those out. That's a way that you can also hedge your position to if we do get that retracement, maybe back to 25,000, you can make some profits on the way there and add some more Bitcoin to your portfolio. So that's a couple different ways, couple different ideas that you can potentially play this week. Depending on what that catalyst does, and if you guys want more info on exactly how I'm playing it, what I'm doing and all that, you guys can join my mentorship program, and the link is going to be in the description there. So I need some water and I didn't bring water. I think I just did a whole lot of talking, kind of just went through my thoughts of what I'm currently seeing right now in the market and what we could potentially see based on price action, based on what's going on in the overall economy, macroeconomic events, based on inflation, based on, what we might see on Wednesday this week. And based on the technical analysis of the charts right now, what we're seeing, where we're at, and all that. The last thing I want to do now that I've covered all that, is I want to do a Q&A. So if you guys have any questions about anything that I've spoken about, anything going on in the market, you could drop it right now in the comments, and if I have an answer for it, I'll go ahead and drop an answer there for you guys. So let me see. Rivers, great to see you in here, man. Appreciate you being in here. I know last week I think it was last week that you asked me when I was going to do a live again. So here we go. I'm finally put it together, and I should be more consistent going forward for the rest of the year. With short videos, I'm dropping those. I'm trying to drop those Monday through Friday. And at least one long form video throughout the week as well. Mr. Q says, damn, y'all crazy. We are pretty crazy, but you got to be a little bit crazy, right? Crazy people are the ones that move the world forward and push the envelopes, right? So I don't see any questions. I'll give you guys another minute or so while I just kind of look over here over Ethereum. We can see Ethereum is pretty much at the same point here. We drop to the weekly. You can see we're at a big resistance there at this 1850 area basically. Solana's had a run up over the last couple days. You can see it's down a lot. We have AVAX, XRP, Cardano's down today as well. So a lot of good stuff, and what I've been doing over the week basically is adding to my long-term positions. Basically, whenever we've had a red day. So anytime we've had a big red day, I've been adding to my long-term position. So I dollar cost. So I add once a week. I dollar cost average into my positions. And that's basically whenever I try to add on a red day. So whenever the market's down, that's when I try to take advantage, add a little bit of money there. Gord said, how is Ice Poker going or Stepin, and are they still interesting to start? So Gord, I haven't done Ice Poker in a few months. I still do have all my stuff from Ice Poker. But since everything's been so down, it hasn't been worth my time. I know I have been keeping up a little bit. I think they have an app now where you can play on mobile, or I think they have at least a way for you to play on mobile. I know they've been doing a lot of different stuff, so they've continued to build, which is very bullish for me going into the next bull run, the next bull cycle. So it's gonna be interesting to see how Ice Poker develops, as it continues forward into the next bull cycle. As far as stepping, I've used stepping, sparingly, from time to time. Like I said, I had a fallout with stepping back like in last year of, I think it was like June or July or something like that. I covered it all on the channel, and that's why I haven't created any more content around it, because I saw the direction that Steppen was going in, and I didn't like it. So behind the scenes, I first, raised my concerns to the team, as I was an ambassador for Steppen at the time. Raised my concerns. My concerns are basically completely ignored, and so then I raised the concerns publicly. And basically they were extremely rude. The team itself was extremely rude, unprofessional, and basically, what they were trying to tell me, either send the message that we want you to send, or you leave Steppen, and I decided to leave Steppen at that point. So, am I still using it? I use it sparingly every now and then. Would I invest in it right now? Probably not. I still do have sneakers and stuff like that. I don't know if I'd put money into it right now. It's a risk, right? So the risk is right now it is really cheap. I think it's under $100 to get a sneaker. So if you're looking to start something cheap, potentially, and you're not too worried about the profit, about the money standpoint on it, I think it does. You can make money with it, right? The thing is, the price has continued to go down over the last year. So if your focus is on making profits, I wouldn't put money in it. If your focus is more on a health standpoint, where you're interested in your health and you need some motivation to get going, get yourself moving every single day, then it's a good investment for you health-wise. And eventually you might see profit. You know what I mean? So that's kind of where I'm at with it. If I was starting brand new, it would be an investment for, it has to be an investment for your health, not an investment for profit. So that's kind of what I would say as far as that. Rivers says, what's your long-term outlook for Bitcoin this year? So in January, my outlook for Bitcoin was around $30,000 to $38,000. I think was my outlook, and we've gotten here so fast, and so many things have happened in the last 2 months that it might be, I might have to raise it, guys. I might have to raise my outlook higher than that $38,000. So 30,000 is this Fibonacci level that we're at right now. 38 is basically the next Fibonacci level, and I'm considering raising it at this point to the next Fibonacci level, which is up here. This would be $50,000. So the way things are going right now, I think it could be a realistic shot at Bitcoin by the end of the year being up to $50,000 and possibly beyond, especially if we get rate cuts before the end of the year, going into the end of the year. Then, of course, in 2024, we have the Bitcoin halving event, which is going to send Bitcoin's price up even higher. And I think in 2024, we have a new all-time high. But, you know, in the beginning, in January, my outlook for Bitcoin was basically this right here. $30,000 and $30,000 to $38,000 was my outlook for Bitcoin. With what's been happening over the last few weeks, I might have to raise it to $50,000. I am very bullish on Bitcoin this year. River says, are you a holder of Kopi? Looks like a winner to me. So I don't have any in my portfolio right now. I do want to look at it, and then I want to figure out a good area to add to if I decide to add it on. I do want to figure out a good price point to add into it, like where I add. So I got to do more research. The reason I haven't added any money into it is because I haven't done enough research on the project. So I am going to do more research on it once I get some time, and I might add it to my portfolio for sure. Gord, yeah, for sure. So Gord says, so it's not a waste to buy cheap wearables for ice poker. It still has a future, you think? Yeah, I definitely think it has a future. I think poker overall will forever be a game, right? If they can figure out how to maintain the rewards, right, and make it sustainable and make it worth for people to actually be able to use it and all that and earn and I think in the next bull cycle, it's definitely going to have its place and potentially go back up. The wearables prices, their values go back up to where they were before. I think at one point they were like at 2 Ethereum per wearable. I think I have, I've bought wearables on the way down. I think I probably have over 10 wearables at this point, and I'm just kind of holding on to it. We'll see what happens if it doesn't work out, then it doesn't work out. It is what it is. But I like to make bets on certain things, and that's one of my bets right now for the next bull run. I'm just holding on to that, and we'll see where it goes. Ducky Dave says, can you donate me a pair of Epic sneakers if you don't want them anymore? I don't even know what they're valued at right now. But I wasn't even using Epic sneakers. I was using my uncommons when I was running because I stopped playing before I even got to Epic sneakers. So yeah, I don't even have Epic sneakers, Ducky. Gord says, any other nice play to earn projects you found? I started with Nodl, seems like the future. Running Node on your phone, but goes really slow. Yeah, so one thing I've learned over the last year as I got into a lot of those play to earns is that the play to earn it really hasn't been figured out. The system, the way it's set up right now, the reward system doesn't work because it works if it's a small community, then it's sustainable because you can sustain a small community because you only need a small amount of new users to be able to continue sustaining a small community. What ends up happening as that community starts to grow, it becomes harder to sustain. And eventually it grows too big where there's no way that you can bring in enough new users to continue sustaining a big community, which is what we've seen in places like Axie Infinity. We've seen it in Ice Poker, we've seen it in STEPN, we've seen it in a lot of different play to earn projects where it just becomes impossible because the community is so big, it's impossible to bring in enough users to sustain the prices because you have to be giving out so many rewards. The inflation just inflates the amount of that coin and what's out, right? So then the value drops. So until something's figured out, it's gonna be tough. It's gonna be tough. I'm not for right now. I'm not investing into any new play to earn games. The one that has had some interest for me was DFIT, another workout type of project. But I'm not invested in it. Another one that I had put on my YouTube channel months ago was Genopets. Again, very interesting project. But I'm not personally invested in the project. It was just I thought it was a cool idea, so I wanted to cover it a little bit. I did an interview with one of the founders. So. I mean, there's a lot of interesting things going on, but for now, I'm not putting any money into them because the play to earn area is still not figured out. Until I see something like that where, I'm not gonna invest any money into it for now. But yeah, I think that's all the questions, and I think we've pretty much covered everything that I wanted to cover today. We're at that hour mark here. So basically, we've spoken about the price update, where the pricing is for Bitcoin, what's on the economic calendar for the week. We have of course the Fed rate interest rates decision. Then we've covered the news. We did a market analysis and a Q&A. That's pretty much it for today, guys. I don't see anything else that we've left out here. Yeah, that's pretty much it. I want to thank you guys so much for tuning in. Make sure to be checking out, I've been posting up short videos. So if you go to shorts over here, I've been posting up a lot of stuff daily. Basically, what it is on Mondays and